guys, so let's go today over an amazing trade that hit a 1-to-6 risk reward ratio, as you can see right here on GBP CAD. So for catching this amazing trade, we need to first of all understand where this came from. So right now we are on the 1 hour time frame, but to understand what's going on actually on that pairs, we need to go back on the daily. So my strategy is actually coming from a higher time frame until the lower time frame. So first things first, if I go back in time exactly right here, I'm gonna explain you what do I see. So the overall bias on the daily is bullish, right? Why? It's because it's pretty simple. We're just been breaking structure to the upside multiple times in a row, so overall we are bullish. Now this is just the overall bias. Of course, I'm not trading on the daily. It would take ages if I would trade on the daily. This is why I use the daily only for the overall bias. What I do next is I go instead on the 4 hour to understand what's going on with the 4 hour structure. Here the 4 hour structure is kind of confusing. You might be a little bit confused on where are the highs, where are the lows, are we kind of consolidating? In this case, yes, if we unzoom a lot, we can see that we're kind of in a consolidation. But if you zoom a little bit more closely onto what's going on right now, we can see that the last break of structure to the upside actually happened right here, as you can see. So this is the high we last broke. If we're looking into something closer, so basically if we're zooming a little bit more, we can as well identify some smaller structure in between, like right here, right here. But overall, the big break to the upside was right here. So this left us with a huge range. It left us with a range from this low to this high. So this is why at that point, what you could have done is really, in this case, what I did as well is I did consider the small structure, because if you left with this range, it's gonna take ages for you to get out of that structure and you're not gonna have any trades. So yes, right here it's a small pullback, but it's still something, you know, and compared to the other structure, it still didn't make sense. So right here we can have a break to the upside. Here we have a break, here is a break to the downside, break to the upside here, break to the upside here. So this means that our range, it's actually from this low to this high, and the previous range was from this low here to this high. So this is our two most recent trading ranges at that time. When we started by analyzing the trade that happened exactly right here, as you can see, we did have already a bearish momentum. Basically, price started to push to the downside, and yes, we broke structure exactly right here, creating us a bearish range, as you can see. But for me, that one break to the downside doesn't mean that we have necessarily a bearish market trend yet. I do need to have this low exactly right here being broken as well. If I have this low being broken, yes, I'm gonna consider this as a bearish market trend. But right now, for me, we can still look for some last buys. Why? It's because we still not out of the previous buying range right here. So with that being said, it's true that we got a break to the downside here, but I can still look for some buys. Now, where am I gonna be looking for the buys? It's quite simple. We're just gonna go exactly right here in this previous range and see where price is. So let me just go back in time exactly right here, so before this even happened, so we can have an overall view. So right here, I'm going to be identifying my valid points of interest. If you don't know how to identify a point of interest, don't hesitate to watch my video that I did as well with the 4Traders YouTube channel. Basically, it's in the description. I'm going to put the link in the description. But yeah, I'm going to identify my valid points of interest, aka my POIs. So my valid POIs are opposite color candles connected to a fair value gap or an imbalance that hasn't been mitigated yet. In this case, I have a POI right here, but as you can see, this POI first of all got completely destroyed and it's no longer valid. And on the 4 hour exactly right here, I don't have anything else according to my rules. This POI is not connected to any fair value gap or imbalance. But If I take 2 candles exactly right here, this one is valid because my POIs can be up to 3. But as you can see right here, same thing. This POI got already mitigated and had a reaction. So for another try, it's no longer valid. So at that point, I don't have any POIs on my 4 hours. So what I can do is I can go on the 1 hour. Because on the 1 hour, we might see some other POIs that we didn't see on the 4 hour. And in this case, this is exactly what happened. As you can see in the bottom right here, we have this opposite color candle connected to this fair value gap right here. And it's as well the most extreme POI. We basically had a lot of inducement and liquidity sitting at those lows, and the POI is just below. So this is really nice. This makes this POI strong as well, for the fact that it's the most extreme one and there's nothing else below to mitigate. So this is the POI that has the biggest chance to have a reaction, and in this case it was as well the last POI available that was unmitigated and that we could have looked for a buy, because after we break through this low, we're no longer bullish, we're gonna be bearish. So that's why when you identify this POI, your next step is to wait for the POI mitigation. So we're gonna have it right here. So basically we just tapped into the POI exactly right here, as you can see. So when we have the POI mitigation, it's quite simple. You're just gonna go on your intermediate time frame to search for your intermediate time frame confirmation. You're not gonna straight away enter here. That doesn't make any sense to enter in here with your stop loss below the low right here, because this can completely get destroyed, as we saw right here. We had another POI, it got completely destroyed. So instead, you're not gonna just enter here. Instead, you're gonna go on the 15 minutes and you're gonna wait for a 15-minute change of character. So in this case, my 15-minute change of character / break of structure to the upside, it's this high that I needed to break. Why? It's because this is the last low that has been broken and we created this last bearish range. So this is the high we needed to break of that bearish range. So now we got this bullish range. So basically I want my overall time frame, so the 4 hour that was really bullish, to align with my intermediate time frame, in this case for it to be bullish too. Then it's pretty simple. I just intensified my most extreme POI. In this case, I have this 15-minute one that looks really good, as you can see. I can as well go on the lower time frame to see if in case there is anything more extreme than this 15-minute one, but in that case we didn't have anything else more extreme, so basically lower than this 15-minute POI. So I'm just gonna take this 15-minute POI as my entry. So I'm gonna take my entry for my buy limit and place it at this box, so at that POI. For my stop loss, I'm gonna cover the entire low, adding 1 centimeter right here. And basically 1 centimeter, this is just the extra pips that I add for my stop loss, and I just do it visually. I add right here around ½ an inch / 1 centimeter visually. And if not, I'm gonna add 1 pip to my entry exactly right here, because sometimes price just do this and then pushes up without actually tapping into the POI, but it just takes you in by a few pips. So basically if you add 1 pip, you have less chance to miss the trade. Your take profit one will be at 1 to 3 risk trade ratio. So this is where you're gonna take some partials out and you're gonna place your stop loss to break even, and your take profit final will be at the hourly high exactly right here for around a 1 to 6 risk trade ratio. So guys, let's see what's gonna happen with this trade. So as you can see, we completely pushed down and we mitigate this POI really nicely exactly right here. And afterwards we even hit our 1 to 3 risk trade ratio. So at that point your stop loss needed to be to break even, so you take your stop loss and you bring it to break even, and you take some partials out, and then the rest you leave it run until the take profit final. As you can see right here, it got hit before reversing. So this is why I usually target the hourly highs, even sometimes the POIs, because usually after price swept the liquidity, as you can see exactly right here, it can just completely reverse on you, and this is why you don't want to be too greedy, and this is why I'm only targeting the hourly high, even sometimes the POYs if it's a counter trend or something like that. But yeah guys, this was a really simple trade. So if we recap everything, it's pretty simple. So overall, higher time frame bullish, I had my big range right here or my smaller ranges right here, but as I was not outside of this range yet, I was still considered it bullish. I identified my extreme POY in this huge range or just in the bottom right here, and basically my higher time frame POY got mitigated. I waited to go on the 15-minute to wait for a 15-minute break of structure / change of character to the upside. As you can see right here, I identified my new most extreme POY in this new 15-minute range. I entered here, stop loss below the low, adding a little bit of pips, take profit 1 at 103, take profit final at the hourly high, and that's it. This was a really easy trade, a step-by-step trade, textbook setup. So yeah, was nothing really wrong with this trade. It was perfect, and it swept as well a lot of liquidity exactly right here, so it was an amazing entry. So that's it guys. If you enjoyed this trade breakdown, and if you enjoyed the strategy, or if you have any questions, don't hesitate to just ask them down in the comments, and it will be a pleasure for me to go and see them so I can answer as well. Guys, if you enjoyed this video, don't hesitate to like, share, and subscribe to For Traders, and I'm gonna see you soon as well for another episode of Koshkah'S Academy of Trading really soon.